Hi, I'm Jermaine McDonald, and welcome to another live edition of Taking Stock. Kalila is still away handling some business, so I'm filling in for her tonight. As usual, we're bringing you the latest business news and telling you how it will affect you and your money. So remember to head over to Kalila's website at kalilareynolds.com/newsletter. Once this live has ended, to be sure to get that newsletter straight to your inbox twice weekly. And also remember to hit the like button, hit the subscribe button to just be a part of this weekly event. Where's everybody joining from? Let me know in the comments below. And next, we're going to look at what's coming up on tonight's show, followed by what's hot in business.
$100 billion more will be allotted to public sector wages in the new fiscal year. American credit rating agency Fitch has revised Jamaica's rating to a B+, and no new taxes for the sixth consecutive fiscal year. We'll discuss the highlights from Finance Minister Dr. Nigel Clarke's opening budget presentation with financial analyst Marc Gayle and CEO of Quantas Capital, Dr. Adrian Stokes. And the analysts weigh in on the latest market developments. Grace Kennedy's results are out. How did they perform? And Stationery Office Supplies will be expanding its reach to Trinidad and Tobago. We'll discuss. But first, here's what's hot, brought to you by JMMB Group, your best interest at heart. Normalcy was restored to Jamaica's education sector on Monday after teachers voted a day earlier to accept an improved wage offer from the government. In a special online conference on Sunday, 629 delegates of the Jamaica Teachers Association voted to accept the wage deal, while 147 voted no. Representatives from the JTA and the government inked the deal Monday afternoon, paving the way for the Finance Ministry to pay out owed funds by the end of the month. The outcome follows days of protest by teachers which disrupted classes last week and a previous vote rejecting the initially proposed offer. Finance Minister Dr. Nigel Clarke had appealed to teachers to accept the offer during his opening budget presentation recently, stating that some $12 billion has been set aside in the current budget for the retroactive payments. Digital wallet provider Link has officially entered the remittance market through a partnership with MoneyGram. The app's new feature allows customers to receive money straight to their Link digital wallets through MoneyGram. According to Link, once the receiver validates the information, the funds will be immediately disbursed to their wallet. Users can collect up to 100,000 Jamaican dollars or the US equivalent daily. U.S. regulators last week seized the assets of Silicon Valley Bank, marking the largest failure of an American financial institution since the 2008 financial crisis. SVB was founded in 1983 and specialized in banking for tech startups. It provided financing for roughly half of U.S. venture-backed tech and healthcare companies. The bank, which invested heavily in U.S. government bonds, took a severe hit from the Federal Reserve's continued interest rate hikes. Last week, SVB announced that it needed to raise $2 billion to shore up its balance sheet. This caused panic among investors who withdrew $43 billion from the bank in 2 days. Silicon Valley Bank was the US's 16th largest bank. What's Hot was brought to you by JMMB Group, your best interest at heart. This segment of Taking Stock is brought to you by Bulwark Insurance Agency, insurance made easy.
Just 2 hours with me can change your life, but don't take it from me.
Why I decided to buy Kalila's masterclass, which is, for me, was a game changer.
I'm Kalila Reynolds, financial journalist and educator, and I'm on a mission to help you get better with money. Take my all-new Money Mission Masterclass. We're talking about budgeting.
My top things today were about budgeting and investing.
We're kicking bad debt out the door.
And also learn about how to pay off your credit card debt.
And I'm giving you the keys to wealth creation by helping you getting started with investing.
This masterclass helped me to start my investment journey.
I had so many takeaways.
The way that I look at money now and saving, I look at it different now.
With a bonus module from Keisha Bailey, my girl, the Profit Jumpstarter, who'll show you how to find great companies to invest in.
I've been in the investing industry now for over 18 years.
So give yourself the best gift. Go to KalilaReynolds.com/masterclass to join the Money Mission. Let's get this money.
All right, welcome back. So let me get some of these comments here. Philbert Smith said he's ready and waiting from about 7:30, I believe. Kish is saying blessings. Everyone, can't miss my favorite program at all. And Kish is straight out to the UK. Levar is saying good night, money makers. Let's get this money. And Levar is saying Keisha need to let us know what's happening in the US. Keisha is not here tonight, but we'll definitely have the analyst segment. And Jacaranda Home Spanish Town, welcome. And Pomer in the building from Anthony. And hello from Panama City, Panama. That's Chris. Welcome, everyone. It's definitely good to have you here. So $100 billion more will be allotted to the public sector wages in the new fiscal year. American credit rating agency Fitch has revised Jamaica's rating to a B+, and no new taxes for a 6th consecutive year. So definitely good news there. So we'll discuss these highlights tonight from the Finance Minister, Dr. Nigel Clarke's opening budget presentation with financial analyst Marc Gayle and CEO of Quantas Capital, Dr. Adrian Stokes. So I'll welcome those two gentlemen to join me. Welcome, Marc.
Hi, Jermaine. Hi, Adrian.
Hi, good evening, everyone.
Good evening, guys. So let's start with the highlights. What stood out for you from Dr. Clarke's presentation? We'll start with you, Marc.
Yeah, so for me, there are a few things that stood out to me. One is that, it's interesting how, so GOJ has been kind of, pursuing this economic reform program, and it's been for many years, from, the Golding administration through the Portia Simpson administration to the Holness administration, right? So this budget is an important kind of like next step in that entire process. But over the last, couple of years, the Dr. Clarke and team and the Holness administration have really been, kind of making some strategic moves. And, one of the things that Dr. Clarke spoke about was this whole notion about, quote unquote, sharing the prosperity, right? So, naturally, by bringing down your debt to GDP ratio, that frees up resources for GOJ to invest in the country, build roads and so on. And one of the key things that key decisions that they made here, which is what you spoke about, Jermaine, is an increase in the wage bill, right? So public sector employees get a significant increase. It's an additional $100 billion in wages for the next fiscal year, over last year, right? And if you look over the last 9 years before that, like I'm looking at the numbers now, in 2012 the increase was 7.8 billion, and like every single year it ranges between 8, 10, 6, $11 billion. So the $100 billion increase in 1 year is a pretty substantial increase. So that was like one thing that kind of jumped out to me. Another thing that was interesting is, on the revenue side, he announced he announced a number of different measures, but two measures that jumped out to me is the income tax credit for solar panels, and then so what that means is that if you buy a solar system for your home, and again, this is TBD, we're going to get more details about this because there have to be amendments, I think, to the Income Tax Act and some other legislation. But the announcement that he made was, if you buy a solar system for your home up to $4 million, then you will get an income tax credit up to 30% of the value of that system. So in other words, if I understand it correctly, according to how he described it, you will get a $1.2 million tax credit against your outstanding taxes when you buy a system that's $4 million or more, a solar system. So that creates a huge incentive for people to know, really start taking alternative energy seriously, particularly for their home, right? So that was one thing. Another thing that stood out to me was He made a point to talk about the fact that, in Jamaica, if you own a car and you want to sell your car, you can't just take it to the dealer and dealer buys it from you. The dealer will take it and the dealer, they will put it on the lot, but the sale happens typically between two people. The dealer is just arranging it. And the primary reason for that is the way that GCT is applied on the sale, right? So, for example, if the dealer goes and buys a car from you, so let's say they buy it for $1 million, and then they sell it for $1.2 million for argument's sake. GCT is not charged on the difference between the 1 million and the 1.2. GCT is charged on the entire 1.2, which doesn't make any sense, right? So 15% of 1.2, I mean, that's like a weird number, I shouldn't have chosen that, but I think it's like 170,000 or something like that. So imagine, they sell it for $200,000 more, hypothetically speaking, and hypothetically speaking, they under the current regime, they would have to pay $170,000, if my math is correct, or $160,000 on GCT. So the change that he made, or that they're going to make, is GCT would only be applied on the difference. So GCT will be applied on the 200,000. So meaning in that particular instance, it's only 15% of the 200,000, not 15% of the 1.2 million, right? So now all of a sudden, dealers have an incentive to take the car from you and resell it, and then because they can only, they would only then pay the difference, right? Pay GCT on the difference. So what he hopes, or what he has communicated that he hopes to achieve, is to create a vibrant secondary market for car sales, or rather, kind of like amplify the secondary market for cars, for auto sales, by giving brokers the incentive to, directly buy from you. So ostensibly, I should be able to drive up to the lot, and then the broker just writes me a check, and then I just leave. So those kind of like three things were. I mean, there are a whole bunch more which you can go. The new tax offices, the one in Mobile, they're going to have a drive-through and all these different things. All those things are interesting. But yeah, those are kind of like three things that jumped out at me.
Okay. What about you, Dr. Stokes?
Yeah, a number of key themes coming out of the budget, not just from the finance minister, but from the opposition spokesman on finance, as well as the opposition leader who spoke today. From the finance minister side, there is a clear commitment to continue with fiscal discipline, with the main goal there being reducing Jamaica's debt to GDP. And that has been a huge success. We're coming from a debt to GDP of over 140%. And at the end of this fiscal year, it will come out at about 80%. And the end of the next fiscal year, 23-24, it is scheduled to fall to 74%, which is quite significant. And there's a clear commitment, and you can see the clear, let's call it macroeconomic strategy from this government, which is to maintain fiscal discipline, to maintain macroeconomic stability, and with that stability in the macroeconomy, then for Jamaica to have private sector-led growth. On the opposition side, the opposition spokesman on finance, one key theme that I picked up from his presentation was the need to reformat our economy, to move it from a low-wage, low-skill economy to one that is based on more value-added products and services, which will require an investment in our human capital. And then leading on to the opposition leader, he focused at least one good thing that, from my perspective, that he spoke about today is the issue of understanding our labor market. There's a reasonably material debate that is taking place in our country. That is whether or not we have a labor shortage generally, and in particular, do we have labor shortage in certain key sectors of the economy? And the opposition leader highlighted the need to base any decision to import labor on scientific evidence, in other words, empirical data, and I believe that that makes a lot of sense. So, and on once that data is understood and we have a better understanding of the labor supply issues, the demand issues, generally have an understanding of the labor market, then that should guide the decision in terms of how we move forward. Because it's kind of a perverse policy action for a relatively poor country to be importing labor when there is still significant underemployment and also unemployment. So that makes a lot of sense to me. The other important area in the budget, just generally, is the issue of public sector wages and salaries. Right now, the wage bill is projected to end 22-23 at 308 billion, and is projected to grow to about 339, roughly 340 billion dollars in the next fiscal year. So they're not adding $100 billion between this year and next. The $100 billion that was added over the period from 2020 to 2021, where the wage bill was 208 billion, to the end of this fiscal year, which is 308 billion. So $100 billion increase over that period of time. But the key thing to highlight from the wages is that wages to GDP now stands at 11.4% of GDP, which is massive. And it is scheduled to stay at that level for the foreseeable future, for the next 5 years. In fact, wages to GDP will be at 11.4%. Keep in mind that our fiscal responsibility law calls for wages to GDP to be at a level of 9% of GDP. So that's something that the government will have to manage quite carefully, because there is the imperative to pay our public servants well, but then there's a fiscal discipline that needs to be maintained to ensure that we can have a stable macroeconomic environment. So those would be my initial feedback from the budget debate so far.
Okay, and we actually have a question for you here, Dr. Stokes. Orville is asking, based on what you just said, how does that translate for the regular Joe on the street?
Well, it depends on which area. I touched on a number of things. So let's take the area of fiscal discipline and the reduction of the debt to GDP. So that is absolutely massive. You can recall, if you go back to a few years ago when we had fiscal indiscipline, when we had a high fiscal deficit, the environment was characterized by high interest rates, which means that for the average man on the street, you're paying more on your mortgages. It was characterized by an exchange rate that was falling significantly, which means that you are paying more at the supermarket, you're paying more at the pumps, the pump for fuel and just basic food item. So macroeconomic stability, which is seen in terms of one variable, which is low interest rate, is absolutely massive to the average man in the street. The other important bit in terms of the average man in the street is the issue of taxes. Now, as Marc said in his opening remarks, this budget marks the 6th year where there's no new taxes. Now, that's massive. Over the last 10 years, if you go back to previous budget cycles, the Jamaican people were faced with massive tax packages. And so to the extent that you can have fiscal discipline where the government is balancing the budget and it does not need to increase taxes, then the average man on the street benefits.
Okay, thank you for that. So let's zoom in on some of the things that were highlights from Dr. Clarke's presentation. So let's start with the wage bill. Based on the amount that is projected to be added, and you spoke about it, Dr. Stokes, what's your reaction to this? Do you think it will be enough? Do you think we're likely to be seeing more negotiations or requests for increase? What's your general take on the government's the announcement so far?
Yeah, so it's a balancing act. Sometimes public policy is an art as opposed to being a science. Now, the fiscal discipline is important. It is the anchor of our macroeconomic strategy, which means that it is the basis on which we are building an economy that will increase employment reduce interest rates, have low and stable inflation, and so that the average man in the street can improve his or her circumstances. Now, when you increase wages to a point where it's eating up a lot of your GDP, then you're placing yourself with a serious fiscal risk. In other words, if we look in the Jamaican budget right now, wages are taking up 11.4% of GDP. If you look at the non-debt expenditure, wages account for 45% of our total expenditure. Now, that's massive. Now, what does all this means? That if tax revenues were to slow down, and they will slow going into the next fiscal year, there's a risk that Jamaica could run a fiscal deficit. Now, why is this important to the average man in the street? When you run a fiscal deficit, it means the government may have to borrow to fund that fiscal deficit, because a fiscal deficit means that you're spending more than what you collect in taxes, and that has to be financed in some shape or form. And how that is financed, you can borrow and or you can tax. Either way, none of those aren't good alternatives for the average man in the street. So when we talk about wages, and while we are very sympathetic to our public servants, the average man on the street also has to consider, am I in a position to pay more taxes to cover more wages? And that's the real issue that we're faced with as a country, in terms of the type of decisions and the type of wages that we need to pay our public servants.
And just to add to that, Jermaine, in terms of, like what does this mean? Because as Kelly loves to say, like what does this mean for you and your money, right, and your pocket? The truth is that the more that the government spends on debt, so the more it spends on interest expenses, interest costs, is the less it has to spend on everything else. So the less it has to spend on building new police stations or refurbishing police stations, and the less it has to spend on buying police cars and equipment for police and hiring more police, right? So you can see is that the more it spends on debt servicing and debt expenses, is the less that it spends on police. Then you can see the direct impact on crime, right? So what that means is the police force is weaker, generally speaking. It has lower or a worse investigative capacity. It means that crimes go under investigated and unsolved. So more crimes get unsolved. The cases that they have to give to give to the DPP are weaker, and so therefore they get overturned more, right? And so generally speaking, when we think about the impact of debt, or like even running a deficit, for example, like Dr. Stokes just spoke about, the more money that the government has to spend servicing debt, is the less it has to spend doing the things it should be doing: building roads, fixing roads, buying buses and investing in crucial infrastructure needs, right? Whether it is roads or buses or trains or whatever it is. Investing in schools, either refurbishing existing schools, paying teachers more, building new hospitals, refurbishing existing hospitals. So if you think about, what does the average Jamaican do? The average Jamaican interacts with public resources, right? Whether it is, all the things we spoke about, right? Police, teachers, hospitals, clinics, and so on. The less resources that the government has, so in other words, the more resources the government has to invest in debt, or to service debt, is the less resources they have to focus on all of those other things. So the worse those services are going to be, the worse the experience is going to be for the quote unquote regular Joe. And the truth is that the average Jamaican, particularly, from lower socioeconomic levels, they tend to interact with those services more than, middle class and upper class, right? That can afford private, doctors and private tutors and all these different things. Yes. So it is the reduction of this debt that frees up space so that the government can invest in attracting better teachers, paying our teachers more, building better schools, investing in schools, getting more resources, for our teachers, and also, doing things like, giving the PATH program more money for lunch money, for example, for students that need it, right? So to answer your question, there is a direct or an inverse relationship between, the extent to which government has to service debt and the extent to which they can invest in the country. The more they service debt is the less they invest in the country. And the less they invest in the country is the worse off the regular Joe is, because they interact with those public sector services more than, let's say, the more well-heeled in society.
Okay. So another point that was made by the finance minister is that the economy has recovered from the COVID-19 pandemic. According to him, the PIOJ projected that by December 2022, Jamaica had surpassed pre-pandemic levels. Has there been any signs, in your opinion, for this recovery?
So, yeah, there we have seen marked signs of the recovery, and the economy grew significantly over the last 2 years because it was growing off the back of a low base. In other words, COVID took a big slice out of the Jamaican economy, and therefore, just mathematically, because you're coming from a lower base, the growth rate is going to be much larger. And one way, or one result of that significant growth was the material increase that we saw in tax revenues. Last year over year, revenues grew by about $58 billion. So quite significant. We saw that. And that's one of the reasons, or probably the reason, why the government was able to absorb a lot of the increases that we saw for public sector workers. Also, the government was able to invest in more public resources, was able to put more money in social welfare, for example, the PATH program, and definitely channel resources to reduce the impact of high energy price on the average Joe in terms of the subsidy that it gave customers of the Jamaica Public Service. So we definitely saw the impact of the growth in the economy over the last couple of years. I must say, however, that the recovery has run its course, right? The economy is now back to pre-COVID level, or back to its level that we saw in 2019. What that means is that going forward, the growth is going to be much slower than what we saw over the last 2 years. So in fact, growth for the next fiscal year is programmed at no more than 2%. That is very, very significant. What this means is that the growth in tax revenues will be much slower than what we saw in the current fiscal year. In this fiscal year, tax revenues grew by over $100 billion. In the new fiscal year, 2023-24, tax revenues will grow by about $50 billion, a massive difference. This is why the finance minister was cautioning the unions in terms of how they were negotiating, and to indicate that the budget does not have the room to absorb the level of increases that were being demanded.
Okay. All right, so we have a question here from the audience, why it relates to the housing market. Why doesn't supply and demand affect the housing market in Jamaica, as there is a high supply of houses coming on the market and low demand because no one can buy? What effect does this have on GDP?
That's,
you want to say that one, Marc, or
well, it depends. The housing market, you have to look at it in sectors, right? So if you are looking at 1 bedroom, 2 bedroom, there's significant demand, just from my own anecdotal observation of that segment of the market, right? So I would say from 1 bedroom, 2, 3, there is significant demand, and mortgage rates are still fairly competitive. I mean, they're below 9%. right? So still fairly competitive, and so the burden there is not too significant. Once you move beyond that 1 to 3 bedroom, or I would say beyond the $40 million, $45 million price point, then the market becomes a little, let's say, less liquid. Probably takes a little bit more time to move those those houses. But certainly, below that, there is significant demand. Definitely in the area of low income housing, that's where again there is significant demand, and perhaps the supply of low income housing is what needs to be increased going forward.
Okay. Right, so let me just get this one in as well. So in light of the government reverting to IMF for loans, what impact do you see on the debt to GDP ratio? It was for Dr. Stokes, but I'll ask you, Marc, as well to share your thoughts on this.
Yeah, so in the stricter sense, the truth is that government of Jamaica has kind of like a rolling stock of debt, right? That kind of that government of Jamaica has to repay every single periodically, right? And what tends to happen is that whenever all the debt expires, then GOJ will go out on the market, and then they will refinance that debt. So they'll either retire some of it or they'll refinance some of that debt. In the case of the IMF loan, my understanding is that the intention is not to go back to capital markets, because interest rates in capital markets are increasing. So it is more expensive now to borrow from international investors than it was, say, 3 years ago. And so my understanding is that the intention is to use this new facility that the IMF, has kind of like made available to its member countries, which the interest rates are very, very low. I believe Dr. Clarke had said 3% or somewhere in the region between 2 and 3%, or a little over 3%, and effectively refinance some of the expiring debt. That's my understanding. So as far as we understand it right now, the debt to GDP ratio is scheduled to continue to fall, like Dr. Stokes has said. 80% as at end of March of this year, and then 74-ish% as at March of 2024.
Okay. All right, let's look at the matter of public transportation. So public transport in this country is a hassle. I think everybody can agree to that. Dr. Clarke announced that the government will be procuring an additional 200 electric buses on a phased basis over a 3-year period, commencing with the 2023-24 financial year, with 100 to be delivered in 24-25 and 100 in 25-26. And this is in addition to the 70 already to be delivered for this year. What is your reaction to this?
Right.
Start with you.
Yeah.
Go ahead, Dr. Stokes.
Right. Again, this highlights the decisions that have to be made around public policy, right? And to recognize that the government has binding constraints. What do I mean by all of that? So when we advocate for significant wages to be paid, for example, we have to keep in mind that the amount of money that the government collects through revenues and grants and so on in any particular year is a finite amount. It's limited. And therefore, while we all wish for everything to be done at once, the fact of the matter that it can't be, everything can't be done at the same point in time. Now, how does this relate to the question that you asked? Now, the government has over 800 billion, 842 billion dollars to spend in terms of its revenues and grants. And it's paying public sector workers about $340 billion out of that. And then it has to decide how much it spends on education, how much it gives to the police in terms of capital equipment, and and in healthcare and so on and so forth. And so that will impact what it can do for the necessary upgrade that we need in public transportation. So I'm giving a very long-winded answer so people understand that the choices have consequences in the budget. If you spend nearly $340 billion on wages, it means that you have less to spend on important things like public transportation, because the amount of money that you have is actually finite. And in that respect, the government is no different from us. We have income, and we are guided, or we are constrained by the amount of money that we have in any particular year. And the government, while it can borrow, right, when it spends on wages and so on, it limits the amount that it has to spend on things like public transportation.
Okay. Marc, I'll pose this one to you. It's a question from Orville. Why the JUTC can't generate a profit? What is it that they're doing? Why expenses keep overrunning income?
Jeremy, you want to get me in that trouble? JUTC, boy, that one. Your honestly, your guess is as good as mine. I mean, there are, like the managing director, it went on the radio recently and gave some interviews, and in his view, he believes that the reason that the JTC cannot turn a profit is because the wages are, the rate, meaning the rate for the tickets and stuff, is artificially kept low by the government for political reasons. No, I can't speak to that because I'm not, A, I'm not in the government. B, I'm not, I don't work at the JUTC. But, many people have reported and, kind of guesstimate that, there are other issues. I mean, it is widely kind of known that there are all manner of inefficiency issues at the JUTC. In terms of like the specifics, I'm not sure. I would be very, very reticent to get into the details. But what I would say is that, there is a general feeling, particularly among, analysts and economists, that the government of Jamaica may be better served, divesting it and, just allowing somebody else to try and take a crack at it, because it's been like a millstone around, the on the wallet of the taxpayer for many, many years, just like Air Jamaica was and Sugar Company.
Yeah, what I will say about JUTC and public transportation in general is that I personally am not expecting the JUTC to make a profit. Public transportation in many countries can be seen as a public good, and they are what we call positive spillovers from having publicly funded transportation. In other words, the fact that it gets a subsidy, it's not novel, it's not new to Jamaica. I think what we need to ensure is that it is efficient, well run, and so that the subsidy that we put inside there can be justified, right? But there is a big argument for a subsidy to be paid or to be given to public transportation because of the economic returns and just the general social good that you derive from having a good public transportation system. And JUTC is no different. And as I indicated before, if you look at many other countries, they do in fact subsidize public transportation.
Okay. Final question. What are your views on Jamaica and the Caribbean being impacted by imported inflation in the near future?
Yeah. So, Marc, go ahead and then I'll chip in.
Yeah, I mean, well, so what I was going to say is that the truth is that Jamaica is a small island economy, right? We do not make a lot of stuff. For example, all of our energy is effectively imported, except for, the small amount of renewables that we make here, Wigton and other places. But so as a general rule, we are at the whims of global markets, particularly when it comes to commodity prices. So things like oil, and other commodities. Now, that being said, one of the challenges that Jamaica has had historically has been, you have the global shocks, right? So like whenever there's an oil price spike, or a dislocation, a war, natural disaster, or something, and that negatively impacts a key import that Jamaica has to import and the price, right? That then puts stress on the Jamaican economy. And previously, before these economic reforms started in 2009, 2010, before that happened, there would be a second order effect where, because Jamaica was highly over leveraged, meaning we had a lot of debt, an external shock like an oil price shock would have second order effects on the company. You would on the country, sorry. You would see our dollar, for example, the JMD would take a significant depreciation hit as a result of this exogenous shock, or sometimes the government had to purposely devalue it to kind of like absorb that shock. But in recent times, with the economic reform program that has been taking place over the last decade plus, the impact of inflation hasn't been as brutal as it was in our, in the history that I'm talking about. Now, that being said, Bank of Jamaica in particular is definitely concerned about imported inflation, or about inflation just generally, but imported inflation in particular, and the impact on the currency, which is why that they were very, very aggressive, 13 months ago, with raising rates. Now that has had, that has had an impact to credit and other things, but for the most part right now it seems as if inflation is stabilizing. Now, whether or not it will fall back down to the range that BOJ expects in December this year, or early, or Q1, Q2 next year, that is to be seen. That depends on what happens in the rest of the world. But so the short answer is that we are definitely going to be impacted by the nature of the economy. We're a small island open economy, and we trade with the rest of the world. But in terms of the impact, isn't likely to be as bad as it used to be 20 years ago, if that's any comfort at all.
Thank you, Marc, Gayle. Thank you, Dr. Stokes, for your insights and your overview of the budget. Thank you so much.
All right.
Thank you for having me.
All right. Take care.
All right. Take care.
Take care. All right, everyone. So I'm asking you now to take part in today's poll question. Do you trust the financial services in Jamaica? A, yes, they're doing the best they can to protect our money. B, no, about to start putting my money under the mattress again. C, a few bad apples don't spoil a bunch. D, we need stricter rules, laws to protect our funds. E, other, and we're asking you to leave a comment below. And while you're at it, please remember to hit that like button. And up next week, we've got the market recap, and the analysts are standing by.
This segment of Taking Stock was brought to you by Bulwark Insurance Agency, insurance made easy.
Hey moneymakers, join the KRM fam with our official merch. Get it now at KalilaReynolds.com. Let's get this money.
The JC Combined Index lost 6,000 points, or almost 2% last week. 126 stocks traded across the main and junior markets for the week ending Friday, March 10, 2023. 34 made gains, 82 lost value, and 10 stayed the same. $114 million changed hands on the Jamaican dollar market, valued at $1.4 billion. Wigton was the week's most traded stock. It took up 20% of market volume with 23 million shares trading. The stock opened Monday at 71 cents. Jamaica Broilers traded the second highest. The stock opened this week at $38.24. And JMMB 7% VRJMD CR preference shares rounded out last week's most traded with 10 million shares changing hands. The stock gained 10 cents to open Monday at $2. Now let's see who had the biggest gains for the week. JPS 7% was the week's biggest gainer. The stock was up 87% to open Monday at $82.14. First Rock Real Estate Investments USD was the second biggest gainer. It went up almost 17% to start the new week at 7 cents US. MPC Caribbean Clean Energy rounded out last week's biggest gains. The stock was up almost 14% to start the new week at $90. On the losing side now, Palace Amusement was last week's biggest loser, down 42%. The stock opened Monday at $2.71. PBS USD was down 20%, opening the new week at $1.52. And CAC 2000 fell almost 16%, closing the week at $7.01. Over on the Trinidad and Tobago Stock Exchange, the composite index was mostly flat last week. National Enterprises was the most traded stock. It opened this week at $3.72 TT. JMMB was the market's biggest gain, up 8% to open this week at $1.89 TT. And on the losing side, Trinidad Cement fell 10% to open Monday at $3.51 TT. It was a rough week over in the US, with the Dow Jones falling 1%, the S&P 500 falling 4%, and the Nasdaq losing 5%. At the pumps, 87 gas prices rose $2.56 last week, while 90 rose $3.06. Meanwhile, diesel prices gained 25 cents. In foreign exchange, it took an average $153.55 Jamaican to purchase $1 last Friday. That's 52 cents less than a week before. Meanwhile, it took an average $111.32 Jamaican to purchase $1 Canadian. One British pound cost on average $185.83 Jamaican. And you could buy €1 for $162.66 Jamaican on average. Finally, on the crypto markets, Bitcoin prices rose almost 2% over the past 5 days, with the cryptocurrency trading at $22,097 on Monday. While Ethereum rose 3%, trading at $1,584 on Monday. This segment of Taking Stock, The Analysts, is brought to you by Jamaica National Group. We'll help you find a way. Disclaimer. This is not intended as financial advice. Please consult a licensed financial advisor before making investment decisions.
It's time now for the analysts. So welcome back, Jamar Brown, Senior Research Analyst at JN Group and Business Writer at The Observer, David Rose. Welcome, gentlemen.
Hi. Thank you, Jermaine.
All right, go ahead.
All right, so I guess I'll begin. I'm going to share my screen. Seeing it?
Yes.
Okay, excellent. All right, so tonight we'll be taking a look at Grace Kennedy's recently published results for the financial year, which ended December 31st, 2022. And we'll begin by taking a brief look at the company itself. Grace Kennedy Limited was founded in Jamaica in 1922, and it's a publicly listed company on the Jamaica Stock Exchange and the Trinidad and Tobago Stock Exchange. The group's operations are structured into two divisions, being food trading, where GK manufactures and distributes its products, as well as other brands, as well as financial services, through which GK offers a range of services, including cambio, remittance, insurance, banking, and investment services. GK comprises of companies which operate in the Caribbean, North and Central America, the United Kingdom, as well as West Africa, and the company's core operations are segmented into four main segments, being foods, banking and investments, insurance, and money services. Now, GK continues to make moves to improve upon its diversified business model by making strategic acquisitions, the most recent of which we see here. Now, in February 2023, GK announced it had come to an agreement with Spike Industries Limited to increase its stake in Catherine's Peak Bottling Company Limited from 35% to 70%, thus doubling its stake. With GK becoming its majority shareholder, Catherine's Peak Bottling Company will now become a subsidiary of the GK Group, placing the group in an even stronger strategic position within the Jamaican spring water market. In August 2022, GK confirmed that it had come to an agreement with Scotiabank to acquire 100% of Scotia Insurance Caribbean Limited. GK is now awaiting the necessary approvals to complete that transaction, and when it does, it will offer creditor life insurance in 13 Caribbean markets, within which Scotia Insurance Caribbean operates. Thirdly, Blue Dot Data Intelligence Limited in May of last year, GK acquired a 60% stake in Blue Dot, which is a full-service research and data intelligence consultancy. Blue Dot uses data collection and analytics to inform business insights and decision-making for their clients, who include government, corporations, and non-government organizations. The company is expected to be brought to market via IPO this calendar year, likely by GK Capital. Now, let's dig into what we're really here for, which is the financials. Now, in financial year 2022, GK achieved revenues of 142.9 billion, which was a 10.5% increase over the 129 billion reported in financial year 2021. Operating profit, however, suffered a 14% drop as GK reported mixed results across the group, particularly for its insurance and money services segments. Now, GK's insurance segment showed growth in revenues, however, profits declined due mainly to lower than projected returns on investment income and higher than anticipated claims costs related to inflation. GK Money Services reported a decline in both revenues and profits, primarily due to lower transaction volumes and reduced foreign exchange gains. The knock-on effect of these declining margins over the period was that net profit declined by 15%, from 8.9 billion to 7.6 billion in financial year 2022. It's important to note, however, that GK recorded non-recurring gains of 895 million Jamaican dollars in financial year 2021, and this is compared to non-recurring gains of only $170 million in 2022. Now, when we exclude these non-recurring gains, the decline in net profit this year would have been 7.7%, which is about half of what it is at 15%. Now, let's take a look at their balance sheet. Now, at the end of financial year 2022, GK's total assets stood at $201 billion, having increased slightly by less than 1%, about 0.6% to be exact, from the 199.79 reported in financial year 2021. Now, there were notable increases in accounts receivable. We see here an increase of almost 4 billion, from 20.1 to 24 billion, as well as in inventories increasing to 22 billion. Investment securities increased by about 7 billion. Loans receivables also increased by about 3.5 billion, and fixed assets increased by about 2 billion, from 26.2 to 28.3 billion. However, these were offset mostly by reductions in cash and deposits, which fell by about 5 billion, as well as pledged assets. Let me get that here. Right, pledged assets, which declined considerably by about 9.3 billion, which was a 99.7% decline. Now, this particular line item, it coincides with the decline in repos held by First Global Bank. Now, total liabilities year over year declined by about 3%, 2.7% to be exact, year over year, from 128.8 billion to 125.2 billion. Now, this was primarily due to a 99.6% decline in securities sold under agreements to repurchase, which is associated with the decline in pledged assets we mentioned above. Total equity, which was driven by the group's continued profitability, increased year over year by around 7%, from 71 billion to 75.7 billion in 2022. And equity attributable to owners of the company increased naturally from 67.6 billion to about 72 billion in 2022.
Okay.
Right. So there are a couple risks that GK faces in the short to medium term, three of which we have highlighted here, and those beginning with raw material prices. And we know that the volatility that we see in global markets, it can have significant consequences on GK's manufacturing and distribution businesses in particular. Unexpected fluctuations in the cost of raw materials, for example, can destabilize markets and supply chains, making it difficult for GK to continue to deliver strong profits. Next, we have uncertain financial markets, which we have been seeing news of recently, both internationally and locally. And increased volatility in the financial markets could make generating income from GK's investment portfolios extremely challenging in the short term to medium term. Recession fears, with inflationary pressures mounting, central banks, again, both locally and internationally, have continued to tighten their monetary policy, increasing the risk of slowdown in economic activities in this and the next financial year. A significant slowdown could curtail GK's revenue and profit growth in the future. Now, it is clear, however, that GK is bullish in its ambitions to become a global consumer group, as they have laid out plans to continue to expand both locally and internationally over the next couple of years. So no doubt their strategy team has factored these risks into their plans.
Okay. Thank you for that, Jamar.
Wait, one second. One last slide. Finally, yeah, man, let's take a look at their price chart. Between 2020 and 2023, we see that the price of GK stock has fluctuated, increasing from $57 in December 2020 to reaching a high of $115 in May 2022. Since then, it has declined and is now sitting at around $82. This recent decline has been concurrent with the high inflationary environment, which has led to high interest rates and an overall heightened uncertainty in the local stock market. Notwithstanding this, however, GK has posted commendable results over the period, which, given the fall off in price, has created a great opportunity for investors to pick up this blue chip stock. Currently, GK's PE is trading at around 9.77 times, and this is the lowest it has been for over the last 3 years, where we see it at 10.3 in December 2020, 12.3 in December 2021, and 11.8 as at last December. And when we look at the industry average PE, GK is trading at less than the industry average of 12.0 times. So it appears relatively undervalued in comparison. So in conclusion, we would recommend GK as a buy for most investors who have a medium to long-term horizon. And yeah, that's the end of my presentation today.
All right, thank you, Jamar. David, I believe you'll be speaking about stationery and office supplies and their expansion to Trinidad and Tobago.
Yeah, that's one. That's one element. But just before we move on, GK, is in their share buyback. Hopefully, the TTSEC actually approves their ambitions. But let us see what GK has going forward this year. Their M&A pipeline is pretty robust. In this case, they took they took an increase in Catherine's Peak, disposed of an associate, Pelican Power, was in audited financials. And we should really keep an eye out for GK, considering that Dunleavy is saying that they are progressing at the moment with respect to their international ambitions to list the food division on international markets. But when it comes on to Stationery Office Supplies, they had a phenomenal year, and they are taking 2023 as their next stepping stone for perspective. So what did they do? So for example, they manufacture the seat books, SEEK, seek. Persons who would have gone to school in Jamaica, they'd have been seeing the seat books, exercise books that they've been using, going to classes, taking notes and so on. They distribute furniture. So, for example, they have their own Evolve furniture line. They distribute for Furses and so forth.
1 second, David. Can you just lower the camera a little bit or lower your device
Sure.
so I can see you a bit better?
Sure.
Yes. Great. Thank you.
All right. And they also sell and distribute different types of stationery. So, for example, your planners, your pencils, staplers, anything that you can think of that is in the stationery space. So they had a phenomenal year last year, whereby their revenue grew by 55% to $1.75 billion, and their net profit went up by 135% to $256 million, which is their highest profitability and revenue performance to date in their history, not just specifically to since they listed, but it's their highest performance to date. And the company in turn also had a significant amount of cash generated during the period, which speaks to the company's ability to grow amidst all considerations. And this was also in a period when they shifted from the 100% tax remission to the 50% tax remission. So they're not paying taxes after their first 5 years on the JSE's junior market. In recent times, they announced that they're actually expanding to Trinidad, whereby they've partnered with the Officer Authority down there in order for them to distribute products down there in Trinidad, and in turn, Stationery Office Supplies distribute products for the Office Authority here in Jamaica. And then SOS has also announced that they're doing an expansion of their current location. So they're expanding their warehouse by 7,000 square feet. The current one at Beachwood Avenue, which is their head office, is about 24,000 square feet, so almost a third in terms of the increase in space, which does two things. It speaks to their expected focus for demand later in the future for the different products they're going to need to be put in storage as inventory, and also for the continued expansion of their Seek division, which was bolstered by the asset acquisition of D&K's stationery last year. So while this company hasn't necessarily seen per se as one of those significantly fast growing high flyers, the company is taking its steady time to incrementally grow itself. And this, is in consideration of the fact that they would have benefited from the tax breaks over the period, along with call it 2 depressed years thanks to COVID, but has seen a significant move back forward. They hit an all-time high late last year, $20.40, trading at around $15 right now, $14.50. So they're down about 15% year to date. Otherwise, the company is, continuing to grow into different spheres. You're seeing where QWI Investments is increasing its position in SOS, and we're just seeing the general economic resurgence in the local Jamaican economy, plus their current expansion plans into the Eastern Caribbean.
Okay. All right. Thank you, David. So Philip says, don't sleep on SOS. The cell queue is full of opportunity, though some may see it as walls. So yeah, interesting times ahead for both GK and SOS. I think GK with their share buyback and some of the other things that were mentioned by Jamar. It's let's see how they do for the year. SOS. That's all I can say at this point. Just let's see. But both should have interesting years, I think.
And any more questions on the chat, Jeremy?
I'm not seeing any actually. Just asked if they had any for you guys, but I'm not seeing it. They were more talking about the conversation that was being had earlier.
Well, one smart thing you have to highlight with Dr. Clarke and the current administration is the fact that they've decided to expand the tax base through with the conversion of these contract workers to permanent workers. So that should bear well in the future as we have more persons contributing to the overall tax pie. So that's something to take into consideration, alongside the fact that we're going to be seeing security guards and other professions become permanent workers within the next couple of weeks. And let us also see what happens with the new increase in minimum wage. The most I'm expecting it to go up to is probably $11,000. Anything above that is pretty risky in the context of the current economic environment, which is still plagued with heavy increases that are coming from last year into this year.
Yeah. So, question for you both. Sheldon is asking, why do companies buy back shares?
So GK gave their perspective. In this case, they believe that companies shares are trading below a particular fundamental value that they've assessed, and by actually doing this buyback, they believe that they can unlock further value to over GK shareholders in turn. So when you do a share buyback, two things happen. The company buys back the shares, cancels them. What this does, it provides liquidity to the market in the sense that, let's just say there were not many buyers for the stock. By GK coming into the market, if the buyback is approved, they would buy up shares that are being sold on the market and in turn reduce the number of shares overall outstanding. This does two things. One, instead of getting a dividend and getting taxed at 15%, you're only going to be paying the fees that are applicable for the regular transaction. Two, it would actually reduce the company's number of outstanding shares, so future dividends could actually become larger as a result of there being fewer shares in circulation. And three, it also benefits the company in the sense that they have demonstrated that they're generating so much excess cash that they have found space to consider a buyback in the first place. And the thing is that only companies do buybacks, even if it's limited to an extent, where they have extra cash that they can allocate to such an exercise.
Okay.
Yeah,
So
I
Philip
wouldn't
is
have
saying,
much more to add on that.
Okay.
Yeah.
So Philip is saying good dividends, usually low outstanding share count. SOS might be ripe for a stock split. All right. So, all right. Thanks to you both. I think those are all our questions. I see one kind of snuck in here. Let's take this one quickly. Christopher is asking, how will GK leverage Blue Dot acquisition to their advantage?
Well, going to listen to what Dan Maybe said. He said it's a passive investment and they are not involved to that extent with the management. They're there more as a guide for corporate governance and structure. And that was from GK's investor briefing held yesterday.
Okay. All right. Thank you, David. Thank you, Jamar, as well. Thanks for all your insights. All right. All right. So I believe, yep, there we go.
This segment of Taking Stock, The Analysts, was brought to you by Jamaica National Group. We'll help you find a way.
Hey, moneymakers, you're not an official part of the family until you have your merch. Visit KalilaReynolds.com/store to order your t-shirt and your mask today. Let's get this money.
Right, guys, that's it for our show this week. Let me get in some more comments before we end here. So Kemwa is asking who are they buying it back from? From the persons who are selling their shares? Yes. So they typically buy it back from what's available on the market for sale. Slightly is asking why is JPS 7% appreciating so much? It's an interesting thing to see. It started the year at 64 cents, I believe. Now it's at $80. Who knows? I think anything outside of anything I say might be considered speculation. So I'll leave that alone. It's at 105 now, David. Interesting. All right. So Orville said he's going to sell down LGI stock. I'm not sure how you're going to do that, Orville. So let's see. But I really want to thank everyone for joining the show today. Remember to like the video, subscribe to this channel, and share with a friend. Also, remember to subscribe to Kalila's newsletter at KalilaReynolds.com/newsletter, reminding you that new email subscribers get a copy of her free broker guide, and turn on those post notifications so that you'll be the first to see all her other features. We want to help people learn more about money so that we can all get this money together. Follow Kalila on her Instagram, TikTok at Kalila Ray, and follow KRM Business News on Instagram. Remember that those are her only accounts. She does not have any backup accounts. So be sure to block those, report then block those pages that you see. Also see that persons will share them with her so she can do her post to inform others as well. And be sure to follow Learn Grow Invest on Instagram. So at Learn Grow Invest is how you can find us. So if you want to connect with any of the analysts this week, their information is in the description box. And you also want to visit Kalila's website at KalilaReynolds.com for financial information that you can use however you like it, whether watch, listen, or read. All right. So finally, tell a friend about taking stock. Investing is the new sexy. So let's make it cool to talk about money. I'm Jermaine McDonald. Thanks again for watching.
Let's get this money.